Hi everyone, hope you're all doing well, and today we're talking about the 3 UK stocks I bought this week, and all 3 positions that I did buy are currently positions that I already own, so I'm just kind of increasing my stake in these companies. Obviously, you probably be able to know one of the companies that I bought, obviously because we're the Boohoo investing channel, and we made 2 videos about it this week. You can guess which one of them are, but I did buy another 2 as well, so I'll be talking about them 3 companies. I am currently making this on the Friday, and the US market is still a little bit open here. So there might be a stock that I do buy that's a US company, but if I do buy it, I'll make a separate video next week about it. But I have talked about it on the channel recently. But I did buy 3 UK companies this week, and I'll go through them 3 companies and my reasons for buying them companies. So as always, guys, smash that like button. Let's try to get to 200 likes. And we'll get stuck into the video. So if you do want to keep up with what I'm buying, when I'm buying them, make sure you join the Patrons group. The link is in the description. But number 1, we'll do the most obvious one, the Boohoo investing channel. Boohoo. So obviously I bought this one this week because of the massive dip due to the auditor stepping down. And we even got a big massive shout out on Manual Finance on his channel about Boohoo. So we are getting well known as the Boohoo channel out there. And Manuel, if you're watching this video, let me know in the comment section. But there was the auditor stepping down from Boohoo. And this caused the stock to go down quite low. We historically have been up and down in this range quite a bit. It is a very roller coaster ride in Boohoo company. And the auditor stepping down it is kind of a big deal to Boohoo. I wouldn't say it's as massive as what the stock price has shown, but it did give us an opportunity that I didn't really expect happening in Boohoo. I didn't really expect it to go down to these prices, especially after them amazing earnings were out there. And I think this is a really good golden opportunity here. We're talking about a fantastic company with great revenue growth, especially that US growth in that earnings report, a very clean balance sheet, and really, I see this stock, I don't make short-term predictions, but I do think this could be £3 by the end of the year, and probably within the next 2 years, we're going to be talking about a £5 company for me right now. Now, obviously, the auditor stepping down isn't great, but I do believe they'll be able to get a new auditor. I do believe that it's because of the reputation that Boohoo has got, because of the factory situation, is the reason why they're stepping down. I don't believe it's anything more serious than that, because if it was more serious, I wouldn't see why the chairman, if he knew something was going on, why he would then go buy more shares in the company, because he would know he'd be in serious trouble. Same with the CFO, for example, as well. And also, if it was something more serious than just protecting the reputation because of the Leicester factory situation, the auditors wouldn't step down. They would have to probably report them to the correct authorities to go deal with this situation, like we've seen with previous companies. So I think it's just one of those where they're kind of like, we don't want to get our name carry on in the newspaper, especially the Guardian, with the kind of things that are currently going on with Boohoo, and hopefully over the next kind of few months, Boohoo kind of just chills out a little bit. Let's not get caught in the headlines, and it just carries on doing its own thing. And we saw that previously. The stock price recovered very well since the Leicester factory situation. Unfortunately, I think this news has brought it back down to that situation. And hopefully, Boohoo stays out of the headlines, and this company will do well going forward. And I do expect this one to bring in some nice gains, even over the short-term period. Number 2 was Hollywood Bowl. So I'm a big fan of this company. It's a company that I could be making my second biggest position very soon and overtake Greg's, because I do like it that much. But I was a big fan of the earnings report when it came out recently. It seems amazing how low them profit margins are, or the way to get to profit is. I didn't really expect it to make profit as soon as opening up, but it can do, which is a great thing, because when it starts building more and more up, obviously it's going to get more and more profitable. And there was someone in the comment section on the last Hollywood Bowl video when I did the earnings that actually works at Hollywood Bowl, and he made a very good point. I always like it when people have like inside knowledge, is that Hollywood Bowl originally started with having gaps between lanes, and now they're actually putting like glass shields or whatever you call them between the lanes, so then they can fill up every lane, which obviously if they have full lanes to max capacity, that's obviously going to be brilliant for the company, because they're going to have more and more lanes full, more profit, more revenue. So it seems like it can only build up from here. It seems like Hollywood Bowl is still being allowed to open in tier 3 restrictions as well, which is another bonus for this company. And overall, generally, great management team, all buying shares. They've managed the company so well. There's going to be more and more venues coming up over the next 5 years, which will only increase the revenue and profit, which previously to pre-COVID as well was a company that was growing profit fantastic. It was a company growing revenue fantastic as well, and the share price will go there. And you generally look at the share price as well, and the share price is absolutely sold off right now compared to what it used to be pre-COVID, and it looks like it isn't in that bad of a situation. Obviously there's more debt on that balance sheet now than probably what we would like, and obviously that's why the share price is down. But realistically, in a year's time, I think Hollywood Bowl will get to sorting that balance sheet out, getting the profit, and obviously if it can just carry on being open now, we know it doesn't need any more debt because it's managing the situation and bringing in profit and revenue and being break even, and that's all we kind of want for the next 6 months period of Hollywood Bowl. And then from March time onwards next year, we could see them start ramping up a lot more, restrictions sort of calming down, and the company is going to be in a good position and the share price will follow that. So I am a big fan of this company, and like I say, at the moment it's still my third biggest position, but I generally could see this overtaking Greg's. I don't know when exactly that might happen, but if I just keep buying more and more, then I think it will get there at some point. And the third company is a dividend company. I'm solely in this for the dividend, but I do believe there's some share price appreciation in here. And that company is Legal & General. And this stock has really grown on me over the last few weeks, really. And I can just see myself buying more and more of this position. It's a company which historically doesn't have amazing share price growth. It's a financial play. These plays don't really grow much year over year. They only bring in a steady return. But it is sold off right now, and I do believe that when things get back to normal, the share price will offer some upside, probably 50% upside. But I'll be honest, I'm mostly in for the dividend. It's a very safe company. It's not going to be a game changer. Something like a Hollywood Bowl, it's never going to grow as much as Hollywood Bowl, or it's never going to grow as much as Greg's. But what it is going to do, it's going to have a good dividend that it's going to be able to afford to pay out. And currently that dividend's sitting about an 8 to 9% yield, which is a very fantastic yield. And I'm very happy just to get a little bit of share appreciation, carry on getting a little bit of that dividend as well. And it's a solid play in a financial sector which I don't really have that much exposure to either, which I think is a very good fit for my portfolio. And one thing that I really stands out to me in Legal & General is the amount of shareholders that have been buying this stock as well in this COVID situation. A lot of shareholders been buying, which gives me a lot more confidence as well in the company as well. So like I said, for me, Legal & General is probably the most boring company on this list, but at the same time, it's a very safe stock in a sector that I'm not have that much coverage in. A little bit of a share price gain, and I also expect to pick up a nice little dividend yield as well with this company. So I kind of added a bit more into Legal & General. I might buy a little bit more, we'll see. It'll never make a huge position up in my portfolio just because it doesn't have that much share price gain, but I'm very happy to have it just sitting there and do its little thing over the next few kind of months and years. I think it will do quite well for me. So those are the 3 UK stocks that I did buy this week, guys. I hope you enjoyed the video. As always, smash the like button, subscribe if you're new around here. Let me know which UK stocks you bought this week as well. I always like checking them out, and I'll see you in the next video.